How you doing, Sam?
Good, my friend. How are you?
Good, good. How's the day? How's the week? How's the month?
Everything's great. Life is good. We can't complain. Everything's
Good,
good.
good. Awesome. We have a well-educated real estate, residents in Mississauga. When I ask for questions, they give some good ones. So I got a list of them right now. Are you ready?
Let's do it. We're ready.
Okay. If you're going to invest in a city center condo or a Mississauga South condo, what would you invest in?
I've always said you want to evaluate each one on a case-by-case basis. So I'm in South Mississauga. I mean, I'm bullish in South. I love the proximity to the lake and all the amenities. But you also want to look at cost per square foot to see if it makes sense. So sometimes there's great buying opportunities in the city center corridor. There's a lot of new developments going there. But you just want to be mindful that you're not overpaying, because the whole goal with pre-construction and to actually benefit from it is you're buying at today's value to see future growth potential. So if the builder's future value the pricing, then it's not going to really make sense. And in the last 3-4 years, I've bought a lot of pre-construction. They've all done really well. By the time we close on them in 2-3 years, they're up considerably, $200,000-$300,000, and your cash on cash investment makes a lot of sense to really think about this vehicle. But you want to make sure the cost basis when you first get in makes sense, and I think that's the key piece. Central Mississauga I like for sure. Obviously, I love city center is nice too, because you're close to a lot of different amenities as well. But I think you evaluate each on their own merit.
Awesome. You said you've never lost in pre-construction. Is there a chance that you could lose in pre-construction?
Sure, there is. It's the market in the GTA is always typically I've been in the business 30 plus years, and there's only been a couple hiccups or bumps in the road where prices haven't appreciated. Most notably 1990 when rates went to double digits. So if you bought then, you might have seen yourself maybe offside for a few years. But in the last 5 years, 7 years, anybody who's bought pre-construction has done really well. So my nephew's bought 6, 7, 8 places, and they've all flourished. And he's done really well with that. And I'll give you a couple examples. I bought a pre-construction near our South Mississauga office. At the time, I paid $375, and I thought maybe I was overpaying. I wasn't sure, but today it's worth about $650, $675,
Wow.
and that was about 2-3 years. And I bought one at the S2 development. I encouraged 40 of my teammates, friends, etc., to buy some there. I paid $550. Within 6 to 9 months, they traded one on the MLS, the exact same model, for $750 in 6, 7, 8 months. And remember, the cash on cash, I'm only putting down 10-15%. So on that project, I put down maybe 75,000. I made 200. So my returns exponentially, it's phenomenal, right? So I think people can do really well with that. But if you just want to be mindful, you're buying a good location, you're buying at the correct price at that time. If in 3 years the market changes the wrong direction, we're all going to get affected. But the way the market is, it's so fluid in the GTA, and I think prices are appreciating. There's so much demand here. The land is scarce. So I think as much as prices have gone up, I still think there's potential to keep moving in that direction. Now, I always just tell people that, we are a world-class city, but we're not really priced like one. But we are kind of priced like one today. Prices have definitely evolved and moved up. So our price points reflect other world-class cities. But we're one of the top 3-5 cities in the world, so we're blessed to be here. And real estate's not one industry based. Somebody was asking me about buying in Calgary. So listen, you can buy there, but it's really oil. If oil's not doing well, your prices will soften. So GTA is not dependent on one industry. It's a multi-industry based city, and there's so much good things happening here. It's a great place to invest.
Okay, so I feel like people that are watching this are writing notes right now on what you're saying. How is the luxury market faring right now?
It's still doing really well. I mean, if we talk about this year, we dissected the first 3-4 months were crazy madness. It was all well documented. Every property sub 2 million, you're setting the stage for multiple offers. You're usually getting 10, 20, 30, 40. It was insane. Now the market's simmered a little bit, but still a good market. It's a healthier market, and luxury market still performs really well. So what's luxury? I think it's anything over 3 today. Under 2, I think. I mean, 10 years ago, 2 is a big number. Today, it's really just, it's a big number, but it's not like it used to be in terms of purchasing power. But I think 3 plus is still performing well. Even 4 or 5. I think when you get to 6, 7, 8, it starts slowing down a little bit. Just the buyer pool is smaller. But I think all segments of the market have done well. And the Toronto condo market's coming back a little bit now that things are opening up. So I think there's a window of opportunity to buy, and people, if they took advantage, they would have done well, seen good appreciation. The age-old thing, we've talked with this, Cal, that you want to buy when nobody else wants to buy. When people want to buy, that's when you should sell. But we somehow are afraid to go against the grain of the masses. But if you really want to do well financially, I think if you have the courage to do that, you'll see yourself succeed.
Cool. Another luxury home question. Do you expect any new luxury homes to be built in Mississauga over the coming years? If so, where?
Well, mostly, yeah, sure, but they're mostly infills. They're one-offs. You're not going to find a development. So you're going to find somebody who's bought a lot and put up a 7,000 square foot, palatial home, and they're looking to sell it. So you're seeing they're on the market. They're coming and going all the time, but you won't see a plethora or larger scale than that. So right now there's no more land. So you're just seeing the one-offs where somebody's got a 100 by 200 lot. It's more of an older bungalow, and somebody's going to buy it, build it, and sell it. And it's tough for builders today because the cost of the supply chain's really kind of broken down with COVID, and so the cost of lumber's come down finally, but I mean the build cost has gone up a lot. Land cost is pretty high. You've got to factor in HST, capital gains. So it's not easy for a builder to make money today building, but I think if you're looking for luxury homes, you're going to have to find one-offs, and they are out there for sure. Cool.
How do you think brand new communities such as Lakeview Village and Brightwater will impact Mississauga in the long run?
Aside from the logistics of the traffic concerns, I think very favorably. I mean, they're great. Lakeview's a great location, and 20, 30 years ago, they're all just kind of wartime houses, kind of community homes, which are almost like beach homes, and now you're seeing a lot of great houses, and they're now trading. Some of the bigger houses are trading at $3 million. That was unheard of in Lakeview. So you're seeing that market transition nicely. Brightwater is doing very well. I mean, we're good friends with Frank Giannoni, one of the principals. There's 4 developers there, and I think it's going to really bode well for us. I just am a little concerned about the infrastructure and the ability to support extra traffic. That's my only concern. But from all other aspects, I think it's a great win for us.
Nice. Should I invest in Brightwater, Sam?
If you can, I mean, listen, for sure. I mean, the demand's so high. When anytime a project comes out, we're on the VIP list. I mean, they get scooped up within 24 hours, so they go real quick. But I think it's a good long-term play. They won't be ready for 3, 4, 5 years, and I think you'll see great appreciation over that time. And it's interesting because now they're trading at 1,000 square foot, and that would have been 3, 5 years ago intuitively a very high number. But now it's kind of, it's a number in Mississauga, and in Toronto is more like 1,500 to 2,000 in the right pocket. So you're seeing an appreciation in cost per square foot, but it's being supported, and people are buying and transacting and still performing really well.
Nice. I've got another question here. What are your thoughts, and you probably get asked this a million times, what are your thoughts on the possibility of a future housing crash or a correction?
Yeah, I mean, listen, that discussion's ensued for the last couple of decades. So people always talk about the market's going to crash and burn. And some people were so sure the market was going to burn, they actually sold their asset and went and rented till the market came down. But guess what? It never came down. So to get back in was really hard. So while the notion of maybe a price adjustment is a possibility, I think it's a short-term blip because there's too many good things going on in the GTA. I mean, really, you got to think about one thing, Cal. Because of COVID, the last couple of years, we haven't had the foreign component here. People haven't been able to travel. So if you open up the floodgates in 2022 and you allow 2020, 21, and 22 new immigrants coming here who are qualified to buy, the demand's going to be excessively high. And so we had a phenomenal real estate year. We're still continuing to have a blockbuster year without the aid of foreign money. So once that comes in, you just got to think that that's just going to put more pressure on pricing. So I don't think there's an end to. Now, I'd love to see a 3 to 5 to 7% increase each year. That's healthy and sustainable. When you start seeing 20, 30%, then I worry about that because that's not sustainable, and eventually there's going to be some sort of correction. But I just, I was surprised by how well we did during the COVID era, and we've talked about this, and how well the market continues to do today. Of course, we're aided by really low interest rates. You've got 5-year money at, hovering around 2 or up or down, and so it's all-time lows, and I think that's a big variable. But I don't really think, listen, I'm still buying real estate today. We bought quite a few places over the last 6 months, and so I'm bullish despite the prices being a little higher than they were 5, 10 years ago. I still think there's movement to go upward, and I'm putting my money where my mouth is, so I think we're still good.
Cool. Awesome. Here's a reporter question from one of our reporters. While affordable housing has always been top of mind for many, a lot of attention has been paid to the issue because of COVID-19, and so many people are hurt financially. What's your opinion on the creation of adequate affordable housing in Mississauga?
Yeah, listen, I just don't know. I think it's very important because it's difficult for many people today to find affordable housing. I just don't know what the right mechanics of how to implement that, because I do think there's a strong need for that, and I think it's really difficult for people today to get into the housing game. And it's unfortunate, because I do feel the younger generation, with the cost where they are today, I mean, it's the income requirements to qualify for the mortgage with a stress test and all the above, it's very stringent. So if you're not in the game parlaying equity to another property, then it's really tough to get in the game. But I'm very bullish on finding ways to make sure that affordable housing exists. I think our councillors, and we've got a great team with our mayor and everything, to find ways to make sure that we fulfill that very important requirement.
Awesome. What one piece of advice would you give to someone who's selling a home?
It's interesting, because when the market's really buoyant and strong, I mean, a lot of times the thinking is, well, we'll just put on the MLS and we're going to get 5, 10, 15 offers, and, we'll have a really good outcome. And I think that was definitely the case the first 3-4 months. So when the market's really strong, the key piece is making sure you have a good negotiator on the other side for you. So whoever's representing you, make sure they know how to negotiate and maximize the most dollars you can get for any of the offers. So sometimes the seller will think, oh, I did really well and I got X dollars, but if you had a really good agent who understood how to maybe extract more money, you could have maybe got an extra 20, 30,000. So I think knowing how to negotiate during a strong market is important, but also when the market's just kind of, it's a more balanced market, you want to take all the right precautions, all the right steps to have great success, which means staging is really important. We believe in that strongly. We have 2 full-time stagers that work with us, our own staging, furniture, and accessories, because statistically speaking, a staged house sells for 3% more than a non-staged house. So it really makes sense to put your best foot forward, because people buy visually, right? So I think that's an important element. We also want to pre-inspect all our list properties to make sure if there's anything that's any issues with the house that arise, then we can deal with that on the front end, so we don't have any issues in the back end. Being proactive is really important. And then, of course, spreading it out to as many people as possible, having large tentacles to make sure that the property is adequately exposed. So if you've got a property that's $700,000, you don't need to expose it internationally. There's got to be enough buyers to absorb it locally. But as the price point goes higher, you want to make sure you have the appropriate marketing strategy for that property to get the best and the right eyes on that property. And I think that's really important, because a lot of times we'll take on listings where people didn't have success, and our value-added proposition is really high, and I think that's what a lot of times yields us good results.
Cool. And on the other end of the sword, if somebody's about to purchase a home, what one piece of advice would you give them?
Well, it's starting to finally feel like a more balanced market, so it's time to think about getting in the game now. The first 3-4 months, we told a lot of our buyers there's going to be better opportunities, and let's not get carried away, because sometimes there was a tendency after you lost 3-4 bids and you got outbid by a dramatic amount that you said, next one I'm not losing, and you put it all out there, and then you might find yourself offside. So be disciplined with your decisions and kind of put a cap on what you want to pay. But I think today there's buying opportunities, and I think that's going to continue. So that madness we saw, which while it was an interesting period, we don't really enjoy seeing 40 offers come in and 39 losers, right? So we like that it's just a healthier market where people can get in the game, not have to make really quick, impulsive decisions. And I think we're starting to see the momentum swing to where it's going to be more balanced. So I think make good decisions. But it's the old adage when you're buying: location, location, location. Get a good location. Obviously, if you're handy, you can find a place that needs work. You can probably see some potential once you do the work. One of the areas I was concerned about when there was multiple offers, a lot of buyers, not our buyers, because we always had pre-inspections done for our buyers, but they'd come in with no conditions, and sometimes the house was a problem, and they didn't even, didn't have an opportunity to look at the house in more detail, and I think that's really a big mistake. So, I mean, if you're gonna have an agent represent you, and you've got to go into multiple offers, spend the $300-500, do a pre-inspection before the offering date. So even if you lose $300 to $500 because you lost out, it's a whole lot better than finding out you're walking into a can of worms, which is going to cost you tens of thousands potentially. So just, and I'm sure everybody who's got good representation will make sure they take the right steps as well.
Cool. Awesome. Okay, let's, sometimes I know that realtors watch this too, so because this is definitely a realtor question, what was the toughest challenge you faced as a realtor over the pandemic?
Yeah, I think the initial part was most difficult because we just didn't know how to navigate. We didn't know what to expect. And I've got a good-sized team, and we want to make sure that they're comfortable and knowing that they're going to be taken care of. And so I think the initial phases was just managing expectations with our teammates, with our staff, and with our clients as well, because we just, we thought, many of us, including myself, thought this would be a longer deal and we were going to, probably have a difficult ride in the real estate sector. So I think that was probably the most difficult part, because really the pandemic, real estate wise, after the first 4 to 6 weeks when we kind of got our bearings, has been fantastic. So we have nothing to complain about. But in the initial period, was just trying to adjust to our new realities. And I think, truthfully, a lot of new synergies have been created, not only for real estate, but a lot of sectors. So for us now, if I've got to go downtown to meet a client, but it's not necessarily relating to just viewing their house, we can Zoom. I don't have to go and spend 45 minutes an hour fighting the traffic and vice versa. So I think there's efficiencies that have been created if we take the good from it. And we're just hopeful that round 4 doesn't come in the fall and all that stuff. But real estate is one industry we've been very blessed. We've flourished during difficult times, and we feel really compassionate and sorry for a lot of the industries like hospitality, retail, travel, where I've got a lot of good friends in those arenas, and it's been really tough for people, right? So I think for us it was managing teammates and getting them on track and being supportive during difficult times, which thankfully was short-lived.
Awesome. Do you do commercial real estate, Sam?
We do, yeah. We do commercial. Okay. We have a commercial division within our organization as well.
Okay, so I do have a commercial kind of question here. We're looking for a standalone restaurant, parking, even for small events, so maybe in the parking lot. How would you look for something like this?
Looking to purchase, or looking for?
They're looking for purchase.
To purchase. Yeah. I mean, listen, a lot of times the interesting thing with commercial properties, which is unique and different than residential. Residential, say 90% are posted on the MLS online. A lot of times commercial properties is having the right contacts with the commercial realtors, and we do have that as well too, because they're not always visible, they're not online, they're offline listings. So I think just having good affiliation with the right people will help you, get you the right opportunities that hopefully fit your criteria as well. But I mean, you can find those. I mean, I think it just depends on location, price, etc., and they're available, and sometimes they're not as obvious because they're not posted like they are in the MLS.
Cool. It's a good question here, and I'm looking for a lakefront house that is the most affordable in the Golden Horseshoe. Is there one?
Yeah, there is. I mean, listen, Mississauga, Oakville, Burlington's become really out of reach for lake. I mean, just lots alone are really exorbitant, so it's hard to get in. But you start going to Niagara, Stony Creek, that whole line there. We've sold quite a few houses recently where you can get something, I guess relatively affordable. We sold one for just over $1 million on the water, which is pretty good, right? For being on the lake. You're never going to get that in Mississauga, Oakville, Burlington, Etobicoke, right? But as you venture more westward, there are some opportunities. And I mean, one was probably an older house, but you could probably spend $1.5 million too. I mean, you probably got to think in that range there, but you can make go of it for sure. Where we are today, Mississauga, that lands $4 or $5 million for waterfronts today. So
true. Okay, and yours truly, Sam. We had a flood in our house. Pipe broke and flooded all three. It started from the master, living room, basement. Anyways,
what caused it? What caused it?
Pipe bursting.
The temperature, like, was it cold? Because it
just burst in the middle of the night.
Wow.
And yeah, it was. It is what it is. And then I realized how important, obviously, insurance is. Right. So what kind of recommendation, would you give to somebody for house insurance at a minimum? Because we have it, but
Yeah, I'm going to tell you a story which will really open the eyes to a lot of people listening. So probably about 7-8 years ago, there's a property we had listed in Sherwood Forest, which is a nice part of Mississauga as well. And it was a $2 million asset. Now it's probably $3 million, whatever. Prices have gone up, but they didn't live there. It was vacant, so we had staged it and all the above. And it was really, that's why I was asking what the temperature's like. Sometimes the temperature, if it's really cold, if the pipes have any kind of weaknesses at the joint, it could explode, right? So in this case here, we had a second showing, and we always had an agent there. So it looked like things were moving forward positively. Go there day 2 for the second showing. Actually, the day 1 for the first showing, we realized the furnace was turned off. Something was wrong with the furnace. They had cut it off. So we said, guys, like, the pipes are freezing. You've got to call. I'm not sure what's going on, but you got to get the heat on ASAP. Otherwise, it's going to be a big problem. So they called. I think they, by mistake, didn't make their payment. And so they got to restore it. Everything seemed like it's going to be fine. Went there the second day for a second showing, hopefully going to get to the finish line. It was like Niagara Falls. I've never seen a house like this. I mean, there must have been 3 or 4 joints where it opened up, and it was just overnight. The basement must have had 2-3 feet. The main level walls were caving in, and I said, "Oh my God, this is like a disaster." So we called the clients. We said, "Guys, call your insurance company right away. You've got a big problem here. I hate to even show you the pictures, but I have a duty to show you this." And they said, "We don't have flood insurance."
Oh my God.
So guys, for an extra $50-100, I mean, no flood insurance. So they basically had to sell the house as is, probably lost $1 million in the sale, right? So it tells you how important insurance, be overinsured, better overinsured than uninsured. So if you don't have the, sometimes, oh, I'll save $50 or $100, but honestly, at the time you need insurance, I mean, they're going to find ways not to insure you, right? So if you don't have adequate proper insurance, you're really going to get snookered. I felt really bad for them, but I mean, at the end of the day, it was a lesson for you to make sure all our clientele knew, listen, make sure you get insurance and make sure you look at the policy that you have the proper coverage. I've got a place in Florida. Imagine if I didn't have hurricane insurance. Every time there's a hurricane, I'd be very nervous. Costs extra for that rider, but that's almost like a no-brainer. You've got to have that. I mean, in Florida, in hurricanes, I mean, they're synonymous. So if you don't have coverage there, you're in trouble, right? So I think, yeah, insurance is a really key piece. And listen, I'm not even about real estate. I think each people should have life insurance, whether it's whole or term. They should have critical insurance. I mean, all insurance is just that. It's a policy. So I overinsured myself 20 years ago. Thank God. I mean, I didn't have to use any of it. But if I did, I was protected. I didn't have to now tap into, you know, savings or whatever. So I think insurance is such an important, now it's sometimes overlooked, but really important, because people never think anything's going to happen to them, right? When it does, it's too late.
So Sam, you're saying overinsure yourself for everything. That's what you're saying.
I think so, for sure.
Awesome. Cool. Sam, those are all the questions I have. Anything you want to bring up or talk about?
Pat, I enjoyed. You're a good man. Always good hanging out with you. And I think we're doing this once a month, which is great. And I look forward to seeing you soon. And come out to the poker games. I know you lost a few big times, and so you got to make your comeback now.
Just send me the invite and let me know what UFC fight is going to be on, and I'll be there. I don't see. I come to at the time I did come. I came there knowing that I'm not there to win. I like UFC. You have a nice place, and yeah,
Let's hang out and have fun. Let's hang out and have fun. It was a lot of fun having you there, but it was short-lived. You came and, you hit and ran, so we got to see you more often, right? So
I'm down.
Anyway, you're running all the time. You look great. Keep it up. You're looking younger every day, so whatever you're doing, keep it up.
Thanks so much, Sam. Same to you, man. All right, take care.
Take care. Lots of love. See you guys.
Later.
Bye.
Bye.